Retiring on dividend income sounds like a dream, but with SCHD, it's actually doable. In this video, we'll break down how much of SCHD you'd realistically need to retire comfortably. Whether you're aiming for $1,000 a month or a completely dividend-funded lifestyle. Let's walk through the math, the strategy, and the potential pitfalls so you can build a passive income portfolio that actually works. So first, what is SCHD? SCHD is the Schwab U.S. Dividend Equity ETF, a collection of high-quality, dividend-paying U.S. companies. It's known for its strong performance, consistent yield, and low fees. Now here's the key question: how much income does SCHD really produce? As of early 2025, SCHD yields around 3.5% to 4% based on trailing 12-month dividends. Let's use 3.75% as a working average. So if you had $100,000 invested in SCHD, you get about $3,750 per year, or just over $312 per month. Now that we know the math, let's work backwards. How much SCHD would you need to retire? Let's say your monthly income goal is $3,000. To earn that from SCHD, you'd need $3,000 divided by 0.0375 equals $960,000. In other words, nearly $1 million invested in SCHD would give you a $3,000 per month passive income stream, assuming no dividend cuts or major tax hits. Want $4,000 per month? You'd need around $1.28 million. Want $5,000? That's closer to $1.6 million to $1.7 million. These numbers might sound high, but keep in mind many people spend 30+ years saving and investing toward retirement. This is just one ETF, and it's doing a lot of heavy lifting. Let's break it down by goal. $1,000 per month equals $320,000, $2,000 per month equals $640,000, $3,000 per month equals $960,000, $4,000 per month equals $1.28 million, $5,000 per month equals $1.6 million. Now, if you're not planning to live fully off dividends, that number gets much smaller. For example, if SCHD is just part of your retirement income, combined with Social Security, rental income, or part-time work, you might only need half of that. How long would it take to get there? Let's say you're starting with $0 and can invest $1,000 per month into SCHD. If SCHD continues to grow at around 10% annually, and you reinvest the dividends, also known as DRIP, you'd have $77,000 after 5 years, $206,000 after 10 years, $542,000 after 15 years, $1.2 million after 20 years. This is the power of compounding and staying invested. Even with a modest monthly contribution, time and reinvestment do the heavy lifting. Using the 4% rule with SCHD, you might have heard of the 4% rule, a retirement rule of thumb where you can safely withdraw 4% of your portfolio each year without running out of money. If SCHD yields around 3.75%, you're nearly hitting that mark with dividends alone. This makes SCHD a great candidate for both growth and income without having to sell your shares. SCHD versus individual dividend stocks. Another benefit of using SCHD is that you don't have to manage 20 individual companies. You don't have to monitor earnings reports, worry about dividend cuts, or rebalance constantly. SCHD is a basket of high-quality dividend payers, selected based on fundamentals, screened annually, and adjusted as needed. It saves time, reduces risk, and keeps you diversified. Tax considerations. Now, let's talk taxes. Dividends from SCHD are typically qualified dividends, which are taxed at lower long-term capital gains rates if you hold the ETF for more than 60 days during a 100 and 21-day period around the ex-dividend date. That means your tax bill may be much lower than if you were flipping stocks or trading frequently. Always consult with a tax advisor, but in general, SCHD is one of the more tax-efficient dividend ETFs. The hidden benefit, dividend growth. SCHD doesn't just pay a good dividend, it's grown that dividend over time. In fact, over the last 10 years, SCHD's dividend per share has grown by more than 10% annually. So the longer you hold it, the more income you get, even without buying more shares. This is key for retirees who want their income to keep up with inflation. Final thoughts. So how much SCHD do you need to retire? It all comes down to your lifestyle, your goals, and your timeline. If you're aiming for full dividend retirement, plan around 25 to 30 times your desired monthly income, assuming a 3.75% 4% yield. If you're blending SCHD with other income sources, you may only need a few $100,000 to make a meaningful impact. Either way, SCHD offers a powerful mix of income, growth, and simplicity, which is why it continues to be one of the top picks for retirement investors in 2025. Subscribe to Asset Index for more smart investing strategies, ETF breakdowns, and real-world income blueprints.